Should you buy TLT now? Hello, members, super savers, and bond course fans. I hope you're healthy and well. Here are the 3 topics that we'll be covering in this week's Treasury update video. 1. Should you buy TLT now? This is our Diamond NestEgg community question of the week, and one that we get fairly often. For those of you who are not familiar with TLT, TLT is BlackRock's iShares 20-plus year Treasury Bond ETF. 2. Where did Treasury yields end this past week? And 3. What are the yield expectations for the upcoming 2-year, 5-year, and 7-year Treasury auctions? And in this last section of the video, I'll also be sharing the highest yielding new issue agency and corporate bonds that are currently listed on Fidelity's platform, as some of you have requested. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. As I mentioned at the beginning of this video, TLT is BlackRock's iShares 20-plus year Treasury Bond ETF. It's passively managed with a not unreasonable expense ratio of 0.15%. And its investment objective is to track the investment results of an index composed of U.S. Treasury bonds with remaining maturities greater than 20 years, meaning that it's a long-dated Treasury ETF. Here's a chart of TLT's share price over the past year at the time of this taping, so from July 2023 to July 2024. During that time period, TLT's share price peaked on July 19th, 2023 at $102.95. And it had a second peak on December 27th, 2023 at $100.51. Both of these peaks, as well as this third one here, happened as the market was betting on upcoming interest rate cuts. Remember the inverse relationship between interest rates and bond prices. All else being equal, when interest rates go down, bond prices go up. And also worth keeping in mind, the longer the remaining maturity of a bond, the more sensitive its price will be to changes in interest rates, both upwards and downwards. Bond beginners, folks, please refer back to Module 1 and Module 2 if you need a refresher on how interest rates, bond prices, and the maturity of a bond tie together. So, the investors who bought TLT here, and here, they were probably thinking that when the Fed cuts interest rates in 2024, bond prices would go up and therefore the price of TLT would also go up, which in itself is correct as an assumption. However, as we all know now, the Fed hasn't cut rates yet so far. And in fact, earlier this year, some in the market were even discussing the possibility of further rate hikes rather than rate cuts. So with that backdrop in mind, it's no surprise then that TLT's share price has come down a fair bit in recent months. Here's where it stands at the time of this taping. And that's why when folks ask me this question, should I buy TLT? My answer also comes in the form of a question. Do you think that rates on longer dated treasuries will go up or down? If you think that they're headed down, like these folks may have thought here, and here, then you should consider buying TLT, because if longer dated rates will go down, then TLT's share price should go up. If, on the other hand, you think rates on longer dated treasuries will go up, then you should probably not consider buying TLT, because if that happens, TLT's share price would go down from here. Now, based on the latest inflation, employment, and other relevant data, it does appear that inflation is cooling, and the market's current wager is on a September rate cut. But here's the thing. Even if the Fed cuts rates on the short end, and the Fed always sets their rates at the short end and does not control the longer end. So even if the Fed cuts the rates at the short end, there is no guarantee that rates on the long end will come down in a similar fashion. But I'll save that one for another video, because a topic like that does deserve its own video. Drop a comment below if this is something you'd like us to explore further. Also drop a comment below. Do you think rates on the long end have peaked? Would you buy TLT right now to bet on lower long-term treasury rates? Personally, I wouldn't, because I do think that rates on the long end may still have a bit more runway. And equally important, as many of our Diamond NestEgg regulars already know, I have a strong preference for buying individual bonds and holding them to maturity. Because of these 3 C's: clarity, control, and cost. So for example, if I found current long-term bond yields attractive and wanted to lock these rates in for as long as possible, I personally would buy individual 20 or 30-year Treasury bonds for my portfolio to hold them to maturity, instead of investing indirectly via an ETF. Bond masters, folks, please refer back to Module 5 on individual bonds versus bond funds for a refresher on the 3 C's. Bond beginners, folks, you can find that video in the bonus bond vault here. If you're not in our bond courses, you can learn more about our 3 C's of buying and holding individual bonds to maturity in this video here, linked below. Right, so now that we've covered our community question of the week on TLT, let's move on to the next section of this video. As we so often do at the end of a week, let's compare Treasury yields from this past Friday versus the previous week. Here we have all the maturities that the Treasury issues at auction. Here's where yields stood this past Friday, and here's where yields stood at the end of the previous week. Yields on the very short end were mixed, as you can see here, while everything 2-year and above ended up for the week by a few basis points. Relative to the beginning of 2024, bond yields are nearly all still up, as you can see from this table comparing Treasury yields from this past Friday versus January 2nd. This row shows the increase or decrease in rates since the beginning of this year to the time of this taping. Increases in rates are shown in black, and decreases in rates are shown in red. The 1-month, 2-month, 3-month, and 4-month maturities are down, with the 6-month T-bill unchanged at the time of this taping. Everything with a maturity of 1 year or more is still up since the beginning of the year, though. You can find more details on these rates for any day of the week that the bond market is open on the Treasury's Daily Treasury Par Yield Curve Rates page. All sources are linked below in the first pinned comment. Now, keep in mind that this overview gives you a general feeling for where rates currently stand along the maturity spectrum. The yields that you may get when you buy at a specific auction or from a specific broker will likely differ a little bit from what's shown here. So, that was a recap of bond yields from last week. Now, let's take a look at what's on the upcoming Treasury auction schedule, as well as where some of the new issue agencies and corporates are going out at. Here we are at Treasury Direct's upcoming auctions page. If we scroll down, we can see that all the weekly T-bill and CMB auctions are happening as usual. And if we scroll down further, we can see the 2-year T-note, the 5-year T-note, and the 7-year T-note will be auctioned off as well this upcoming week. None of these are reopening auctions, so the coupons are still to be determined. Also on the schedule is this 2-year floating rate note new issue auction. At the time of this taping on Fidelity's platform, here's what the coupon and the expected yield are for the 2-year T-note. And here's what the coupon and the expected yield are for the 5-year T-note. And here's what the coupon and the expected yield are for the 7-year T-note. Do keep in mind that all of these numbers can and usually do change all the way up to the time of the auction. And as promised, for those of you interested in agency bonds for a bit of a higher yield, here's where the highest yielding new issue agency bonds stand this week. And for those of you interested in corporate bonds, here's where the highest yielding new issue corporate bonds stand at the moment. So, who's buying this week? And what are you buying? Now, if you're interested in continuing the discussions on the upcoming week's new issue treasuries, agencies, and corporates, or anything fixed income for that matter, then I invite you to join this month's live member Q&A. on Monday, July 22nd at 5:45 p.m. Eastern Time, 2:45 p.m. Pacific Time, with highlights of the coming week's 2-year, 5-year, and 7-year T-note auctions. The replay will be available afterwards, as usual, in the member area. All right, member super savers and bond course fans, I hope you enjoyed this video and learned something new. And if you did and want a deep dive into how to invest in bonds and build a bond portfolio while yields are attractive, then check out this video here on our 2024 bond courses. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. Good luck to everyone who's planning on picking up some bonds this week, and see you again very soon with more brand new wealth building content for your financial journey.